Nature and Scope of Tax Planning and Management in Corporate. Presented by Niriksha, MPM Government First Grade College, Karkala. Tax planning is an activity conducted by the taxpayer to reduce the tax liable upon him or her by making maximum use of all available deduction, allowances, exclusions, etc. feasible under law. In other words, it is an analysis of a financial situation from the taxation point of view. The objective behind the tax planning is insurance of tax efficiency. Tax planning allows all elements of the financial plan to function in sync to deliver maximum tax efficiency. Tax planning allows a taxpayer to make the best use of the various tax exemption, deduction, and benefit to minimize their tax liability over a financial year. This process is varies from person to person and depends on many factors: taxable income, time schedules for investment, expected returns, etc. Over the years, tax planning scenario has become more dynamic and complicated due to constant changes in the tax law and falling interest rate. Further, tax planning cannot be done in isolation. It should be part of overall financial planning. Tax management. It means planning affairs in such a manner so that the tax obligation is managed properly. The objective of tax management is to comply with the provision of income tax law and its allied rules. Tax management helps in avoiding payment of interest, penalty, prosecutions, etc. Corporate tax management means it is dealing with the tax matters of a corporation or a company with a view to maximizing the after tax rate of return on investment after ensuring voluntary tax compliance. Examples: tax management deals with filing of return in time, getting the accounts audited, deducting tax at source. Each corporate entity has to ensure that it keeps proper records, deduct tax at source where it is necessary, pay advance tax in time if applicable, file return in time, comply with notice received from the tax authorities, and be aware of legal remedies where it does not have its right under the law recognized. Nature of tax planning. First one is reduction in tax liability. The first and foremost characteristics of tax planning is that it results in the reduction in tax liability of an individual, which ensure that an individual has more disposable income which can be used by an individual for consumption for making investment which can come in handy in future. The basic need of tax planning is to reduce the tax liability so that enough surplus out of profit remain with the earner of it for his personal and social needs, also for future investment in his business. This is only possible by planning his tax affairs properly and availing the deduction, exemption, and reliefs, etc., which are admissible under the Act. Next one, advanced planning is needed. Another feature of taxation planning is that one needs to plan in advance regarding how to make sure that tax liability is reduced to maximum possible extent by investing in tax saving instrument right from start of the financial year, because if you are thinking that you can reduce your tax liability by doing taxation planning night before the last date for filing income tax return, then you will be definitely disappointment. Next, investment in tax saving instruments. Tax planning can be done only by investing in tax saving instrument, which can be through bonds or mutual funds or fixed deposit of banks. In simple words, one cannot claim tax relief by making an investment in any asset rather than has to make an investment in instrument for investment available in the market if one wants to claim tax relief from tax authority. Here, tax planning can be done only by investing in tax savings instrument. Next, made every year. Taxation planning is one thing which has to be made every year, and unlike other investment like real estate or stocks where one has to revive the investment after 2 or 3 years. In simple words, just like you get increment in your job every year, in the same way taxation planning has to be done every year unless you stop earning enough money to be tax liable. Next, dynamic in nature. Tax planning is dynamic in nature because every year you have to modify your tax plan according to rules framed by the government. As the government keeps changing tax law, which in turn keep the taxpayer on toss as he or she has to change his or her investment in tax saving instrument accordingly. It is legally recognized. A taxpayer resorts to tax planning in such a way that tax are not well and avoidance of the tax through tax planning is quite legitimate provided it is done without any fraud or violation of any tax law. It is legally recognized. It can be done without any fraud or violation of any tax law. Next one, it is moral. It is moral and fair as it is under the law. Tax planning is done without violating the provisions of law, and therefore it is well accepted by law, society and the nation. Nature of tax management. First one is statutory provision of law. Tax management refers to the compliance with the statutory provision of law. It is mandatory. While tax planning is optional, but tax management is mandatory. Third one is penalty. Poor tax management may lead to levy of interest, penalty, prosecutions or fine, etc. In some cases, it may lead to heavy financial loss if proper compliance is not made. That is, if a loss return is not filed in time, it will result in a financial loss because such loss will not be allowed to be carried forward. And the fourth one is maintenance of account. It includes maintenance of the account, filing of return, payment of tax, deduction of tax at source, timely payment in advance, etc. Scope of tax planning. First one is reduction of tax liability. An SSC can save the maximum amount of tax by properly arranging his or her operations as per the requirement of law within the framework of statute. The basic need of tax planning is to reduce the tax liability so that enough surplus out of profit remain with the earner of it for his personal and social needs, also for future investment in his business. This is only possible by planning his tax affairs properly and availing the deduction, exemption, and reliefs, etc. Next one, minimization of litigation. There is a war like situation between the taxpayer and tax collectors, as the former wants the tax liability to be minimum while the latter attempt to extract the maximum. There is always war between taxpayer and the tax administrator. The taxpayers try their best to pay least tax and the tax administrator attempt to extract the minimum. This sometimes result in prolonged litigation. Actually, the main reason for litigation lies in tax avoidance and not in tax planning. Whenever a taxpayer wants to reduce his tax liability by finding a loophole in act, the tax administrator does not agree with the interpretation of the SSC, under which he is demanding exemption, deduction, or relief. It results in litigation. Good tax planning is always based on clear words of the statute or in conformity with the provision of the taxation laws. In such a case, the chances of litigation are minimized. Next one, productive investment. One of the major objective of tax planning is the channelization of taxable income to different investment plans. A proper planning brings fiscal discipline in the functioning of taxpayer and reduce the transfer of money from the person who has earned it by hard labor to the government for waste and ostentation and growth, which in turn increase the tax revenue of the government. Next, healthy growth of economy. The growth and development of the economy greatly depend on the growth of its citizens. The growth of a nation's economy depends upon the growth of its citizens. Saving through tax planning device foster the growth of the economy, while savings through tax evasion lead to the generation of black money, the evils of which are obvious. Next, economic stability. Proper tax planning brings economic stability by various techniques such as mobilizing sources, for national projects or availing ways for investment which are productive in nature. And the tax planning is also helpful to the employment generation because the amount saved by next planning is generally invested in the commencement of new undertaking or expansion of the business. This creates new employment opportunity in the business. Further, taxation laws are so complicated that by large taxpayer cannot plan their affairs effectively. Hence, such people need the service of chartered accountant, financial advisors, and such persons join the business concern either as employees or provide their service as private professionals. Thus, tax planning is not only the need of the taxpayer but also the society as a whole and the government. Next, scope of tax management. First one, TDS, tax deducted at source. Persons responsible for deducting tax at source should be deducted from the income and that should be paid to the central government on time. Moreover, he should issue deduction certificate to the deductees and file it in the income tax website. Next, payment of tax. It include payment of advance tax, payment of tax on self-assessment, payment of tax on demand. Payment of tax on demand means payment after receiving notice from authorities. Next, maintenance of books of account. Every businessman or a professional must maintain book of accounts and other relevant document so that the tax can be computed accurately and verified by the accessing officer. Maintenance of accounts of book, voucher, bills, correspondence and agreement etc. It is a part of tax management. Audit of books of account. Books of account for accounting records have to be maintained if the gross receipts are more than rupees 1,50,000 in 3 preceding years for an existing profession. And this is also applied to a newly set up of profession whose gross up receipts are expected to be more than 1,50,000. Collection of tax at source. In some special cases, some person responsible for collecting the tax at source from the buyers. They should comply with those formalities. Furnishing the return of income. The tax manager must ensure that the return of income is furnished on time, otherwise, the assessee will lose the right to carry forward and set off the losses and become liable to pay interest, penalty, prosecutions, or fine, or both. Documentation and maintenance of tax records. An assessee should keep a complete and update tax files so that the documentary evidence can be made available in case of all queries. Tax files include filed returns, Form 16, documentary evidence in support of deduction, rebate and relief, court order, etc. Review of order of Income Tax Department. Review the assessment order and other orders received from the tax department is an important function of tax management. If there is any mistake in the order, application for rectification can be made. If the order is prejudicial to the interest of the assessee, he can file an appeal, revision, or application for settlement of case can be made. Thank you for watching.